Hello, everyone, and welcome to the Beginner's Room, one of my favorite sessions in the Beginner Room. It's Learning Life with Anna Maria. How are you doing?
Hello, Gil. Hello, everyone. I'm doing great. I was really excited for this session. It's one of my favorite sessions as well. You know that
Yes.
Learn It Live, where I actually get to learn how to trade, and it's been great these past few months that we are having this session. So I'm really excited. What about you? How are you doing?
I'm doing good as well. And it's not only a few months that we're learning together, it's almost a year, I think.
It's almost a year. Yes, exactly.
So, for the viewers, look, this is the beginning room. You can ask us questions. There is no stupid questions. Of course, trading related, right? We are not,
Yeah.
we don't talk about relationships, but trading related, you can ask us any kind of questions and we try to answer you that. Um, I felt like we started last time again with technical analysis. We did a Dow theory, and I felt like this was really needed. Also, the feedback was great from the viewers, and I thought we have to continue with that. I think people still they want to know technical analysis. They want to know how to trade from the chart. And I'm often do fundamentals and very advanced stuff. But I think we have to go back to the basics. Um, so I thought how to trade momentum. That's a great topic. Um, it's relevant to everyone. And yeah, I would like to do that this hour. What do you think?
Well, that would be great. I would like also, before we proceed, to just say hello to everyone who has joined. This session is being simulcasted on YouTube also. So if we
Mhm.
have any viewers from joining from our YouTube channel, thank you for being here. To everyone else, of course, you can, as you know, just go ahead and leave us your comments. Um, we will be monitoring the chat room. So if you have any questions or if you want us to discuss anything, just go ahead and let us know. And with that being said, I'm more than ready to proceed.
Okay, so let's start. By the way, I just opened before our session, I opened a small trade here in Euro Yen. I'm speculating that we have here a trend reversal, that we start to coming really down here. And I just opened this a few minutes ago and that with a very small position size, and it already starts to go nice in my direction. So I'm very happy about this. But again, this is not a topic. We talked last week about the tenets of the Dow theory. The Dow theory, for those who didn't participate last week, is the basics of any technical analysis. It was created by Dow, Charles Dow, the same
Mm-hmm.
guy who invented also the Dow Jones Index, what we call the US 30 here. Um, and he also invented, or he founded, the Wall Street Journal, still the most important newspaper in financial markets until today. So very an influencer guy. He would have a lot of followers if he would live today,
Mm-hmm.
but he didn't got very old, sadly. I think he born in 1856 and he died in 1902. So not even 50. Lot of achievements, but in his last years, he started to write a couple of articles in the Wall Street Journal about basic rules in the financial markets. And this became the Dow theory. And the Dow theory, again, is the fundamental of technical analysis. And we talked about this last week. But the rules, that are eternal rules, so it doesn't matter that they were found, that they were created in 1900, they are still valid until this day. And but of course, many things developed since 1900. I mean, 1900, it was incredibly difficult to get live charts, and there was no internet connection. Normally, you got the prices one day later. When they actually happened, everything much more complicated.
Mm-hmm.
Um, and when and Charles Darwin also he died, and he didn't finish his work. So other people came, and they developed the price action theory. And price action, I would just say, is the continuation of the Dow theory. And we will talk a little bit about price action. So I
Okay.
start I start with the presentation. And first we start always with the same thing. We repeat it again and again. What is a trend? And first, why is it important to have to talk about trends? The first thing I would say is that, I mean, I'm estimating, but I would say 80% of successful traders are trend followers. I would even say that the fact that markets create trends is what it make it different to the casino. Okay, if I go to a casino, I can bet on red, I can bet on black, but I can do whatever I want. My chances are always 50%.
Mm-hmm.
Right? There's no, even if there was 5 times red, it's still 50% chance if the next time it will be red or black.
Mm.
Right?
Yeah.
It never,
You don't know. You don't
you
know.
don't know, and it's always 50-50. It's even a little bit less than 50-50 because once every 36 rounds there can come also the bank, and then everybody loses. So it's less than 50% chance, and this is why over the long run everybody loses in the casino, especially in the roulette.
Mm-hmm.
Trading is the exact opposite. If you know to trade, you can bring the advantage on your side. So if you trade for a long time, like the next trade is also 50-50 chance, because it can go either way. But if you have a system and you know your system works over a long period of time, you can make money. You become the casino. That's the beautiful thing in the financial market. Because the house wins always, right? So here it's you are the house now, and you can win always. Not in every trade, but in the long run. Now,
Mm-hmm.
why is that? Why can you be better? And one of the most important reasons is that markets tend to trend. They have a tendency to trend. Why do they have that? Because the human being is a herd animal. They go with the flow.
Okay, so you mean that people will follow the trend. We tend to do what other people like to do.
Absolutely. We are, you can see this with trends, with fashion. You can see this everywhere. People like to go with the flow. And in the market, it's the same. And I would say in the markets, it's even especially strong because fact is, who knows if the euro dollar on 108 is the fair value? I mean, why not 107? Why not 109? Why is it 108 at the moment? I don't know
Mm-hmm.
if it's 108 at the moment, but let's assume. And again, I normally, what I'm saying is, I don't know, but imagine some people know. And if they're buying, they know what they're doing. So I'm buying also.
Yeah, it's
Right?
what a
And
lot of traders do actually. You hear it a lot, especially from beginner traders. Um, is it kind of related to copy trade?
look, kind of. This is why we have trends. So why markets start to go up? Because I see there are some buyers. I assume they know what they're doing. Look, it's a little bit like with COVID. You remember at the beginning, we heard COVID. Nobody knew what's going on.
Yeah.
But the Chinese, they put on mask and they did isolation. The world didn't know what to do. So what did they do? They said, the Chinese, they know what they're doing. They have a lot of pandemics, so let's do the same.
Mm-hmm.
If it was right or wrong, it doesn't matter. Everybody did exactly the same like the Chinese. And and that's how the trend became. Suddenly everybody in the world had to wear masks. Okay. This is why markets trend, exactly that's the reason. Because we are afraid to be wrong, so we go with the flow, we go with the majority. And we can use this fact, we can use this knowledge for our advantage. So if you go with the trend, the chances is more than 50% that you make money. Because if
Mm-hmm.
the market goes up, yes, eventually at some point the market will go down. But why just at this moment? At the moment it's going up, so most probably it will continue to go up. Eventually, one time I will be wrong, but most of the time when I go with the trend, I am right. And this is how most traders make money. They're trend followers.
Mm-hmm. It's like we use a characteristic of our nature for our benefit in order for
Absolutely.
people to make money.
And you see how few people are unique. Now everybody is unique. I mean,
Yeah.
in a sense, right? But when it comes to trends, we are often afraid to be wrong. So we go with the majority.
Mm-hmm.
We feel comfortable, even if it's wrong, we feel comfortable to be wrong. It's uncomfortable to go against the stream.
It is actually. It's difficult also. I mean,
Yes.
on the other hand, when I hear about reversal trading, what it goes hand by hand with reversal trading is that you hear a lot, oh, the biggest wins in trading are reversal ones. But I always think of how much will I risk to lose until the market goes to
Oh, that's so
my
true.
direction.
That's so true. I will show you even a chart, and I see Ahmed is here. I see Henry is here, and of course we're greeting everyone. Um, when I look at the chart, oh look, my trade that I just opened it got even better now. I'm very happy.
What it is that you're trading there?
Sorry.
What it is? Ah, Euro Japanese yen?
Yes, Euro Japanese yen, and you see, I just told you that 2 minutes before we started the session, I opened a trade, and now it starts to go really nicely in my direction. So I'm happy.
Okay.
But that's not the topic. I wanted to show the S&P 500, and I show it even in the monthly chart. So we see it back until 2011. And the most famous people about the financial markets, they are pessimistic people. People like to hear that everything will be bad. I don't know why, but they love to hear it. So some of those gurus, they said in 2007 and 8 everything will be bad, and the market dropped. Okay, we can't see this even here. We don't have this data back, but the market dropped very strongly in 2008, 9. And then the market started to go up. Okay, but of course those, we call them perma bears. They're all the time they believe markets will go down. So they were right. They maybe even made money, but then they continue to be pessimistic and they're not buying. And people who are buying, you know, they're most of the time right. So yes, you have corrections, but they come so seldom. It's unbelievable. So it doesn't matter where you're buying, even at the all-time high, maybe here. Yeah, it takes you maybe a year or two to get to a new all-time high, but the market always goes up.
Is it actually, is this happening with all the markets or especially the stock market? This is another discussion that we had in a previous session, but is this a clear example of how the stock market is meant to function?
Yes, so the stock market, first, one has to understand stock indices are trading strategies. So if you buy the S&P 500, you buy a trading strategy that is called S&P 500. And the trading strategy of the S&P 500 is that I take the 500 biggest company listed by the price, by the stock price, and I make an index out of them. I say, okay, the 500 biggest company are in my basket,
Yeah.
And the weight of each company is based on the market capitalization.